Hello and welcome. You're watching an India Today special roundtable on the roadmap to recovery. Over the past few days, we've been speaking to leading economists, members of the government, leaders of opposition parties on the impact of COVID's second wave on India's economy and the road to recovery from here. Today, we will speak to chief executives of leading Indian companies cutting across key segments of India's economy to get a sense of how bad the months of April and May have been and what the way forward looks like. Joining me on the show, I want to welcome first Uday Shankar, President of the Federation of Indian Chambers of Commerce and Industry. With us on this broadcast is Sanjeev Mehta, Chairperson and Managing Director of Hindustan Unilever Limited, Dr. Anish Shah, Managing Director and Chief Executive of the Mahindra Group, last but not least, Rashesh Shah, Chief Executive of financial services company Edelweiss. So welcome to all our guests. I want to go across to Uday first, who's been speaking to members across the chambers. Give us a sense on a macro basis of how badly all the companies that you work with feel that they've been hit because of the second wave of the COVID pandemic, Uday.
Well, thank you for having us here. To your question, I think the second wave, as we all know, has been very devastating, and the devastation has been both across lives and livelihoods, and also, it has gone across the country. There are different parts of the country where the second wave resurgence began at different points in time, but the overall speed and ferocity with which the second wave spread across the country was something that took everybody by surprise. It took government by surprise, it took healthcare services, facilities, and it took ordinary citizens by surprise. So I think the level of preparedness to deal with a second wave was not as much as it should have been, or it could have been. And the big difference between the second wave and the first wave is that the loss of life that happened and the number of people who got infected happened in a much shorter period of time. So the element of shock and trauma was much higher in the second wave. When you talk about the economy, I think there's one big difference. Last time there was a national lockdown, and this time the lockdowns were at state levels and in some cases more localized. So as a result of that, the supply side of the economy was less disrupted. However, there was a lot of disruption because it wasn't that the supply lines and the manufacturing, etc., was going on unaffected, because so many people were affected, so many people were testing positive, and the atmosphere of fear was so high that people were really, really worried. So things came to a halt, but some production compared to last year, some manufacturing, etc., continued to happen. The big problem was that retailing almost entirely came to a halt. So when you're producing or manufacturing and you're not able to sell or distribute, then it does create its own problem, and the end result is pretty much the same. The second thing that happened in this second phase, Rahul, is that the fear was dramatic. People were affected, people were spending a lot of money on healthcare, and there was the fear that it would get worse. So the demand side completely collapsed this time. And that the collapse of the demand is something that we need to be mindful of, because this is something we'll have to deal with as we come out of the second wave.
Sanjeev Mehta, from your perspective, with all the portfolio of brands that you run, how do you compare the impact of the second wave of the COVID pandemic and the resultant lockdowns with what we saw last year?
Thank you, Rahul. My greetings to all your viewers. I'll just compare and contrast a bit. I'll just pick up from where Uday left. That last year, same time, I think the biggest challenge we had was to start the manufacturing. Yeah, because we went in through a very hard lockdown and everything came to a grinding halt. This year, thankfully, the manufacturing did not stop. So the back-end supply chain kept functioning. Where the issues were, because there were localized lockdowns and different districts were following different procedures. It wasn't a consistent. So in some places, the stores were locked down completely for a few days. In some places, they were open for a few days, for a few hours a day. So there was a different kind of last mile impact. The other bit was if you would recall, rural was very resilient last time. Yeah, and COVID had not impacted rural India at all. This time, that has impacted, and we could also sense it that when it comes to the last mile distribution, the wholesale mandis, many of them came to a halt. One was the restriction. The second was many of the people fell ill. Yeah, the traders fell ill. So that was the kind of impact we felt this time. It was a bit different in nature. I think June will be, Rahul, a very critical month, because this is a time when we will get a sense whether the disruption impact, was it because of constriction of supply chain at the front end, or was it because the demand has got impaired? Now, when you look at it from the kind of portfolio we have, on one hand, there is essentials. Now, in essentials, there wasn't any kind of pantry loading this time. There wasn't an obsessive buying of sanitizers or soaps as we saw last time. Because one was people knew that the stores are open, albeit for a few hours. The second bit, which has certainly got impacted, which is like out of home, categories like ice cream and all. And the third is categories which are linked to mobility of people. As the mobility goes down, you see the impact on the demand for those products. So definitely, it has been a period where it has got impacted. But if we were to wait for another 4 weeks, we'll have a better assessment to what extent the demand has been impaired or the consumption has been impaired, and where is it because of disruption in the supply lines.
So mobility has indeed been impacted, and that would impact companies like Mahindra and Mahindra, Dr. Shah. I'm looking at the numbers for Maruti, Hyundai, Tata, Mahindra and all the other companies. Big drop in domestic auto sales in the month of May. When you compare what we've seen over the last 2 months with what we saw last year, what's your sense?
So Rahul, first, it's a pleasure to be here, and my greetings to all your viewers. The big difference between last year and this year is last year focused really on impact on livelihood. And this year, the impact, unfortunately, was on lives, which was driven by a much greater surge in COVID. We've been working very closely with the center and the state governments. And this year, they worked hard to ensure that there wasn't an impact on frontline workers, on migrant laborers, and therefore production still continued, not at 100%, but in most cases at a reasonable pace. Demand was slower, but on balance, we will not see a great drop in GDP as we saw in the first quarter last year of 24%. It will be far lower this year. On the tractor side, despite the rural issues, the month of May has been fairly good overall in context of the situation, where demand or the total sales were really equal to what we had in the same time in April. And therefore, we feel pretty good about where the economy will go from here. We see a good rebound coming in place. The last week in particular has been much stronger. And in comparison, I would look at while we had a much tougher period and there was a much greater suffering this year, from a livelihood standpoint, I see more optimism.
And if we were to move to the financial markets, Rashesh Shah, it almost seems as if you put the two curves and juxtapose the curve of the stock market with that of daily death cases, they seem to be moving in tandem, completely oblivious to what is happening in the real world. Why do you think that's happening? And from the perspective of the financial markets, how did this lockdown and this wave of COVID compare with the last time?
Yeah, Rahul. See, if you see last year, the health impact was lower because we locked down very early. It was a hard lockdown. But the economic impact was very severe because it was a complete lockdown. If you see the wave 2, I think the health impact is much higher, as we have seen hospitals have been overwhelmed and all. But the economic impact has been lower because it's not a complete standstill. So part of what we are seeing from investors' point of view, they are looking across the curve. They are saying the economic impact will not be as much. Having said that, I think last time the economic impact was a lot more visible. This time it is a lot more invisible because the last time the urban areas got affected, now a lot of economic impact has also been in the rural areas. We are seeing companies in the gold loan sector or the microfinance sectors. They are already reporting a lot of stress, build-up that is going on. The commercial vehicle financing companies, all of them. So already I think the stress is building up, but it's a lot more invisible because the larger companies are doing well. Also, there is a lot of liquidity in the system because RBI last year has pumped a lot of liquidity. The monetary policy is easing at the moment. As a result of that, the larger companies, the formal sector is doing still well because they've not been affected by a complete close down this time, as well as a lot of liquidity is finding its way to the larger companies. So what a lot of people call the K-shaped recovery, what the stock market really represents is not only the formal part of the economy, but really the top end of the formal part of the economy. The stock market ultimately is about 300 companies in the country. So since there is a lot of global liquidity, there is a lot of Indian liquidity, and a lot of that liquidity is not flowing into credit, it is flowing into assets. So it's not just the stock market. I think the real estate market is also doing well because people are not able to earn a good return by keeping their money in the bank, and there is a lot of money. But I must also add that there is a lot of liquidity, but we have seen April and May credit growth come to a real standstill. I think April and May, when you see the credit growth for this quarter, it will be very, very dismal. And I think that is the sign to really worry about, because what is important is not liquidity, but what is important is credit flow.
Okay.
And credit flow to a larger part of the economy, the SMEs, the rural sector, the people, because a lot of individuals, a lot of SMEs have used up all the reserves. I mean, they used up the reserves in wave 1, but in wave 2, people have really, taken loan against the pension fund. We have seen data that people have borrowed against their EPFO, funds and all. So people have dipped into the savings, the reserves are running low, and we need to we need to really proactively ensure that people don't just withdraw and demand just collapses as we go forward.
Those are important points. I want to pivot now from the lockdown to the process of unlocking. And there are different thoughts, Uday, on what's the best way to approach the question of unlocking. At this moment, states still seem to be very, very careful. They're calibrating the unlocking process, pushing it back at least till the end of June. Have you been wrapping your head around what's the best way to approach unlocking at the central level? And given that most of the lockdowns were actually done by the states, how should we approach the question of unlocking?
Well, that's a great question. And I think at FICCI, we've been grappling with that question, in great detail. And for a long time, we have taken inputs from all our members across the country. We have taken inputs from scientists, virologists, experts in healthcare, etc. And we've also looked at the economic dimension of it. And what we've recommended, to the government, both the central government and the state government, our approach to unlocking the economy. First and foremost, we have to recognize that unlock does not mean COVID disappearing. We have to find a way to make sure that while we unlock and while we go about our normal economic productive lives, we are very mindful of the danger that is lurking over our heads all the time. And I think, last time all of us made that mistake, for every single citizen, the moment the country started opening up, we started, believing that, subconsciously that it was all going to be fine. Until a large part of our population is vaccinated, the threat is very much there. And now the challenge is, how do we make sure that we unlock the economy, we restart the economic engine, we start getting people to go about their lives, their livelihoods, without taking undue risks. And that is why I think we need to go towards a cluster-based approach. We need to link it very sharply to the rate of positivity. And we have given that, if the rate of positivity or rate of infection to, ratio of infection to testing is 2.5% or below, then everything can be opened. But after that, there are multiple stages, and restrictions should be imposed accordingly.
Okay.
We've also said that companies should be making sure wherever there is activity happening, we should create, as far as possible, safety bubbles. And the third thing is to dramatically scale up the vaccination and testing for groups that are coming together to drive the economic process.
So at Hindustan Unilever, Sanjeev Mehta, how many of your employees are currently still work from home? Do you have a plan for when you want to bring your employees back? Do you feel the need to bring them back, or do you still want a large part of your workforce to continue working from home, especially those who can afford to work from home?
Yeah, thank you, Rahul. Yeah. If we look at manufacturing, where a large number of our people are engaged, that has been running. And in our factories, we have got a tiered approach. So we look at all the indicators and then take a look whether we need to take further safety steps, how much more testing we need to do, and how do we keep people who are more vulnerable away from the factories. That's been functioning very well. The second is in the front line, which are our salespeople. Yeah. Thankfully, we have got an app where we are able to take orders from the retailer, even without a salesman having to visit them. That's come in very handy. And today we have got 500,000 stores in the country who place their orders. But that's still not a substitute for the salesman going to the stores and selling the last two lines, which make a difference. And that would depend on the speed of vaccination and what Uday spoke about, that as a country, we need to adopt the tiered approach, which FICCI has recommended. And this would be based, first is very importantly, that I don't think there is enough understanding in the world to predict with any degree of accuracy if, when, and to what intensity the waves are going to come. So it's very important that for a country that we monitor the lead indicators, which involve results of testing for infection, the positivity rate that we talked about, genome sequencing, seroprevalence surveys. And if we do it with rigor and we make the results public, it will be very easy for us to adopt the tiered approach. And we are going to follow the tiered approach. The other bit is there is today no investment for a country or for a corporation which gives better ROI than vaccinating the people.
Sure.
Yeah, so our focus would be not just our own people, but about 300,000 people in our ecosystem. How do we get them vaccinated as quickly as possible?
Interesting, because while a lot of IT companies, Dr. Anisha, can afford to work from home, in a manufacturing unit, you want and need people to come back. How are you approaching the question of unlocking, and what would you like governments to do to ensure that we're able to unlock as much as possible without seeing COVID numbers spike?
Rahul, this has to be done very carefully, because the most important part is safety of our associates and everyone around us. So the way we are approaching it is to first look at vaccination. Everyone over 45 has received their first dose already. Among everyone else below 45, we have roughly a 35% rate of vaccination right now. And by the end of this month, we hope to get to 100%, maybe even sooner. What we have done is prioritize it. So workers who are in plants are vaccinated first. And we're making sure that all the other protocols are followed. But from a government standpoint as well, what I would call as concentric circles are important. Start focusing on first what's important for the economy, what's important for frontline workers, for small businesses, prioritize vaccinations for them. The private sector is ready to help. We are happy to hold various camps for communities around our plants. We've been working with governments to do that as well. And that will really help us get to a better state as a country.
You spoke, Rashesha, of credit growth being impacted during this wave and because of the lockdown. How are you seeing the next few months pan out for the stock markets, for the real economy? Do you think that there will be a bit of a very slow unlocking, or do you think that there'll be a sharper recovery from here?
I think what we should all be prepared for is that this is going to take some time. I think maybe another 6 to 8 months until universal vaccination is done. Plus, I think it's not any longer going to be a on-off kind of a wave 3 will close again. I think it's more going to be a very dynamic environment, and that is what we are all doing, even for employees working from home. It's a very, very adaptable, dynamic approach you will take. I mean, the example I would give is, instead of thinking of this as a switch that is on and off, think of this as how you will regulate the speed of a fan. You will keep on increasing, decreasing as the environment changes. And I think first we should all be prepared that until March it will be like that. I think from an investor's point of view, investors are looking across 21. I think 21 will still be a growth over 20, because of the base effect, and 20 was a completely washout year from economic growth point of view. 21 will be a growth, but what we all expected, 11-12% GDP growth, is now, it appears to be about 8-9% growth. This 8-9% growth is also not bad, because at least we'll be back to some kind of growth. But I think we have to see that this does not lead to any permanent impairment. As you know, the wave 2 has impacted confidence a lot more than wave 1 did. And we are seeing that even in business with small enterprises and individuals, they've become very, very careful. I think that is usually the first sign of a slowdown, where individuals and businesses become more careful. So I think we should ensure that that is not there. Maybe a stimulus is required, though the FMS said that there is no need for that. Our view is that maybe proactively, the cost of not doing anything is much higher than the cost of trying to do something. So I think even putting direct benefit transfer, putting money in the hands of people, printing money, maybe expanding the fiscal deficit, but giving confidence back to people, and especially people in the lower strata of the society, not the large companies. See what happens when RBI reduces interest rates, it impacts the formal sector, the larger companies. But when government puts money in the hands of people by cutting taxes, by direct benefit transfer, it impacts the lower strata, what we call the have-nots.
But the government already cut taxes so much now at this time. The government cut taxes previously, didn't really benefit in terms of extra revenue coming in on account of lower taxes. So is there at all scope for that? We'll deal with that separately. I want to talk to Anisha about the kind of recovery you are anticipating from here. Different letters being bandied about. There is a sharp V, there is a possible W, then there's also K. Which letter and why do you think is most likely?
I would go with a U, and a fairly narrow U. I feel that we are seeing a sharp rebound overall in terms of COVID, and that will help things settle down. At the same time, we've seen many families go through a very stressful period, and therefore there is going to be cautiousness before they start spending. And once things come back to normal, I do see a fair bit of rebound coming in. We saw that for tractor sales over the last week, because we are starting to see the sowing season coming in, and therefore that has been prioritized in rural areas. We haven't seen that uptick on the auto side as yet, but that's something we expect in the next couple of weeks. So overall, I would be optimistic on this, and I would look at it as a narrow U.
You're calling this a narrow U, or at least that's what you're hoping for. Sanjeev Mehta, your sense of the kind of recovery that we're likely to see, because there are two things that can typically happen. One, there is a lot of pent-up demand, which will explode as these lockdowns end, because people have been cooped up at home. They're itching to go out, spend, itching to go back to malls. The other reality is that this time round, people have had to deal with the very real consequence of financial distress. They've dealt with death, devastation, and therefore, will they then have the appetite to want to go out and spend big time? So how do you see this?
Yeah, Rahul, I won't get entrapped in using alphabets, but I'll talk about, I think, what the country needs to do, and then I'll also explain how I see things being impacted. I think first, like Anish rightly talked about, we are into the Rabi harvest and Kharif sowing season. So one very important bit is that we have to see that it runs without any disruption, seamless procurement of incoming crops, and so that the agri supply chains continue running unhindered. That's the first thing. Then, as Rashesh talked about, is the poor, rural poor and the urban poor. Rural poor, last time we did a great job of direct transfer of benefit, extending Manrega, and free supply of food grain. I think that will also have to be extended. But what we will also have to do is look after the urban poor, who have also been very severely impacted. The third, I would say, is MSME, and this would be very clearly giving them, whether it's a credit guarantee or whether it is the support you need to give to informal sector employees, because many of them would have lost jobs during the last 6 to 8 weeks. The other one, I would say, is the force multiplier to create livelihoods and give a fillip to the economy, which would be sectors like real estate. Yeah, because they impact massively. And if there is things like interest subsidy that we could give on housing, That would have a big impact. Last but not the least, there are many stress sectors where the situation has got exacerbated by the second wave. And I'm not talking about funding the zombie companies. I'm talking about which would otherwise be healthy. We need to ensure whether it is credit support, extension of debt, direct payroll support, the hospitality, tourism, aviation sector, that's what we need to do. Last but not the least, very critical is consumption of confidence. Now, confidence comes from two important things: more money in the hands of more people, and the second is a hope for a better future. As my co-panelists rightly talked about, that there has been a fear psychosis. People are worried that they may need to have money for another wave for health reasons. So if we embark on this tiered approach of going up and down so that people know what's happening, the second is vaccination at speed. That will restore the confidence. And once the consumer confidence is up and about, I think the India story has taken a pause. It's not going to go anywhere. And India will bounce back. And I'm extremely optimistic. From the mid to long-term story of India, that hasn't faded away at all.
But at this moment, Uday Shankar, would you concede that there is a mismatch between the expectations or hopes of India Inc. with the current approach of the government? All of you and others advocating printing more notes or increasing the fiscal deficit even further, more cash stimulus, more direct benefit transfers over what's already been done. Whereas from what we've heard from the finance minister, she seems to believe let the budget play itself out. There is no immediate need for greater stimulus. So is there a mismatch there?
No, I wouldn't say there is a mismatch, Rahul. And we are saying that there is need for stimulus, general stimulus, more targeted stimulus, and there are sectors where you need to go deeper. You need to look at, unleashing forces of consumption and need to protect really poor people in rural areas and poor people in urban areas. You need to spur demand, all of that. But it's also equally true that the budget was designed after the first wave of COVID last year and all the economic impact that it took. And I think it was a very radical, very bold budget, and it must be allowed to play out. However, we should also be mindful that there is a second wave that has come in since then, and it has caused devastation further upon the devastation caused last year. So there has to be a top-up that needs to be considered. And we need to start looking at what are those areas and what are the kinds of, what is the nature of that doubling down of the stimulus and accelerative forces that we need to be looking at.
Okay, in the last part of this conversation, I want to talk about the one unknown, that third wave, which government thinks is inevitable. Epidemiologists think there will be a third wave, but no one really knows what form and shape the third wave can take, because there could be a big, ugly third wave like we saw during the second wave, or by then there may be enough vaccines and therefore the wave may not be a big, dangerous one. How do we ensure, Sanjeev Mehta, that the third wave is as limited as can be? And beyond that, do you think the fear or the apprehension that the third wave around the corner will hold everything back, will hold consumption back, will hold back investment because companies aren't sure what might happen going forward? They rather allow it to play itself out than go in and make big, bold bets at the moment?
Yeah, Rahul, I think one bit is very clear, that there are many unknowns. You're absolutely right. But there is enough evidence to establish that as far as people who are vaccinated is concerned, even if they do get infected, the severity is much lower. So whoever is getting vaccinated feel far more confident than people who have not got vaccinated. So again, it comes back to the speed of vaccination. But the other bit is, yeah, absolutely. I don't think, like I said earlier, anyone can predict the third. The likelihood is there, and as a nation, it would be sad if we do not build from the learnings of the second wave. So one is, we have to be absolutely prepared, be aware of what the lead indicators are so that we can monitor the situation. And as far as economic activities are concerned, mobility is concerned, we tier up and tier down. But the second bit is, I think, very important to ensure that the health infrastructure, now we've got a few months, we ramp it up and we are district-wise far better prepared than what we were when we were caught on the wrong foot when the second wave happened. I think that's what we need to do as a nation.
Rashesh Shah, will this hold back sentiment, this fear of a dreaded third wave, which everyone knows will come, but no one knows what shape it will take? Does that just mute sentiment, slow down recovery, and get everyone to pull their punches, just hold back for a bit?
I think the good news is, in a way, that people are expecting third wave, so we are all prepared. I think what happened with the second wave is it came in unexpectedly. In fact, there was a high degree of confidence and complacency also when second wave hit us. I don't think anybody, the government, the India Inc., the corporate sector, individuals are going to be complacent about the third wave. So there will be a third wave. Hopefully it will be milder than the second wave, and we will be a lot more prepared, whether it's with oxygen, whether it's with healthcare, hospital, beds and all of that. I think government is also now preparing for third wave, all state governments and all. I think for the business, it will be, as we said, it will be tiered up and down. We will be dancing all the time. It's not like a hammer. It's going to be more like a dance. And I do think the real economy will take off. The real confidence, spending, investment, all of that will take off once we reach that point of what we call universal vaccination. By going by current estimates, we might reach that point somewhere between December to March. So if we get to that place where we think now there is universal vaccination, that doesn't mean there might be new variants and people will still get infected, but the impact will be much milder, and it will be then like any other common flu or common cold, and confidence will be back. So I think between now to December, I think the pace of which how we vaccinate people is important. This opening, closing, third wave, fourth wave, maybe it will be a third wave 3.5 or 4.5, that kind of thing will go on. It will be very local. It won't be all India. And I think businesses are already, getting ready for that. So I don't think it will impact a lot, but real takeoff will not happen as long as the waves are going on.
Anisha, do you concede that Rashesh Shah says that there will be no real takeoff till these waves continue? How are you preparing for a third wave? Does it hold back how bullish you may have been because of the fear that there could be trouble lurking ahead? Anish?
At this point, we are not going to hold back. We feel that there will be a good recovery. We think there are two aspects to this. One is prevention, and second is preparation. Vaccines will help a lot in prevention, but beyond vaccines, we really need to follow the COVID protocol, and it's each one of us that really has to be responsible. So if we are traveling, we should quarantine after that for some time and follow the mask protocol and everything else. The second part is preparation. From that perspective, analytics becomes very important. What we saw really help us, at least towards the second half of this second wave, is strong analytics in predicting what districts we're going to get it next. How do we prepare and ramp up oxygen in those districts? The oxygen requirements for a third wave potentially, how do we prepare for that? And also the health infrastructure that Sanjeev mentioned. So I think a combination of these things will help us get a much smaller third wave, hopefully, and one that we can cope with well. We feel it is important for the economy to recover as well, and that is something that we are pushing forward. So we're not going to hold back at this point.
Okay, Uday Shankar, finally, do you anticipate this outpouring of pent-up demand, or do you think people will hold back, companies will hold back, consumers will hold back because they don't know if there's more trouble lurking ahead?
Rahul, I think there will be a outpouring of some kind of demand, but it may not be across the board. It may be selective. And there is one clear thing that people are going to be concerned about a third wave. Hopefully there would be no such third wave, but people are still going to be mindful of that. And hence there would be some kind of hesitation. The big variable here is the pace and scale at which we can deliver vaccine to our people. And the faster we do that, the more comprehensive it is, the stronger would be the bounce back of the economy, sentiment and morale. And the fear must be taken away from the system. And the best antidote to that fear is the vaccine.
So this has been a high-level, insightful conversation. I want to thank Uday Shankar, Sanjeev Mehta, Anish Shah and Rashesh Shah for joining me on this Road to Recovery Roundtable. We'll have more such conversations, try and get sharp minds together to understand what lies ahead, because bouncing back out of this lockdown is imperative to get the economy back on track. Thank you very much for joining us. More news on the other side. Stay with us. We're back in a moment.